Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. The Dow Jones is down 1,600 points today. That's gonna be what we're talking about. Hope you guys enjoy it and hope you guys learned something. We're gonna be talking about why it's falling, stuff to buy, do you stop buying, do you sell, what do you do? We're gonna be talking about everything in the episode. Roll the intro, let's go. Bam! So today's been one of the worst days we've seen in a very, very long time for the Dow Jones. Dow Jones has fallen roughly 1,600 points. 1,600 points. So that is a lot of points. Now, not to mention this past week has been very, very volatile for the market. Some days it's down, 1,200 points. The next day it's up 1,300 points. So obviously huge swings in the market right now. And why is it? Well, there's a couple reasons why. The very first one is the Fed cut the interest rates. You might be saying, well, that's good for it in the economy. It makes some of the properties values go up. More people are going to continue to buy real estate. Yeah, but imagine if you guys have money in a savings account. If you guys are like me, you guys are nuts for high interest savings. You have money in a variety of things. Robinhood has a pretty high interest rate. It got cut. Ally is about to get cut. They're kind of always a little late to that. But a variety of other banks cut their interest rates. So why is that? Because the Fed cut their interest rates. So how the Fed works is they're like a bank for a bank. They're the bank for the banks, just to put it in very, very simple terms. So when the banks need money, they go to the Fed and the Fed uses interest rates for the banks. The banks use that money, either loan it to you guys for another interest rate that's just a little more, and they make their money that way, and then they pay back the debt that they have with the Fed. But since the banks cut the high interest savings account, imagine if you guys have $10,000 in a high interest savings. Now it got slashed, so you don't want to keep it in there. So that's what they're trying to do. They're trying to get you guys to put your money back in the market, to buy real estate, to keep the economy going and not just having your money sit there. So what are some other reasons why the market is falling? Well, there's this certain virus going around. I'm sure you guys all know the virus. It is literally in my city right now and everyone's kind of freaking out. And that's exactly what the market's doing. It's in the US. People are freaking out. Everything's getting shut down. Everything's selling off. And yeah, that's common. I mean, I feel like if I was holding a lot of positions of that, say Apple has to shut some of their stores down. Obviously, I wouldn't want to be a stockholder. I would want to sell some of my positions. That's what's kind of going on with the overall market. People are getting scared. And after the Fed cut the interest rates, everyone thought that it was supposed to be like the Fed was supposed to help out people, but people got scared because they thought, what does the Fed know and they're not telling us? Did that, and then people got scared and then they sold more and it slammed it down more. So overall, this virus that's going around, I can't really say the name of it just because I will get demonetized and I kind of need some money. There could be a recession coming. There could be a recession. Now, another bullet point and another point I want to talk about is the presidential election. That is not the best for the US economy right now. Just because people are trying to figure out what presidential candidates are good for business, and the ones that are winning could be making the market fall. I read this huge article on it. So right now, honestly, we're starting to enter this bear market territory. So for it to be considered a bear market, the market has to fall roughly 20% just to be considered that. Right now, we're at 22%. So welcome to the bear market of 2020. I hope you guys enjoyed the episode. No, we're gonna keep talking here. We're gonna keep talking. So now that we kind of understand why the market's falling, kind of what's going on with the economy, and kind of why the Fed cut the interest rates, what do we invest in? Do we stop investing? Do we continue to invest? All right, guys. If you guys want my honest opinion for the 99% of America, keep investing. That's the moral of the episode. Keep investing. Keep your stocks going strong. Just keep continuing to buy the dips. If you guys are smart, you guys honestly would put a little more money in it and continue to invest in either your 401k, your IRA account. Just keep it going. Now, if you guys want to pick out individual stocks or indexes, very smart. You guys can pick up low-cost index funds for dirt cheap right now. They're down 22%. So it's like buying a stock back in like 2016. It's literally incredible. So some of these index funds are SPY is a very awesome one. VU is Vanguard's S&P 500 index. Now, what are index funds? It's very simple. So they either track a certain stock or a sector. That's kind of the way I think of them. So you can have an index track the S&P 500. So that is the top 500 companies available on the market. Now, instead of spending, $3,000 or $4,000 or $5,000 or $6,000 on all these stocks, you can just buy a low-cost index fund that is like partial shares divided up. And then imagine if that's, say, one of these stocks doesn't meet the criteria of the S&P 500, it gets kicked out and it gets replaced with a better stock. So that's a pretty cool thing. Now, what's awesome about these index funds is they have very, very little expenses on your end. You just pretty much buy it, and then they do charge a 0.03% to kind of manage the fund. That is dirt cheap if you compare it to like mutual funds, which can charge up to 2% profit per year, which is ridiculous. But index funds are very awesome, and you get paid dividends on top of it. So it's like free money again. Now, okay, now you guys started to invest in your index funds. You guys started to invest in the overall market. What are some stocks to invest in? Well, there's a couple. What I always like to do is I like to invest in low-cost dividend stocks. The reason why I put, low cost, because kind of all the stocks are low cost because the market's down 22%. But I don't know. Buying dividend stocks are a great way to build wealth. You can buy them dirt cheap and they continue to pay you. So dividend stocks perform better in a falling market for a couple of reasons. Because people are more likely to hold a stock when it's actually paying them each quarter or each year to have, on top of the net worth of it going up or down. So some of the good stocks are stocks that you and I know of. These are like blue chip companies like Ford, GM, Coca-Cola, Apple, Disney. So all these stocks actually pay you to own. There's even this one called NLY, which pays you over 10% per year just to have. So it's like 25 cents for like an $8 stock. It's incredible. Now, if you guys think you guys should be worried and you guys don't want to buy anything, here's what Warren Buffett just did. Warren Buffett just bought a ton of frickin' shares of Delta Airlines. Yeah, there's a lot of things going on with the airlines right now just because they don't have as many passengers due to this one certain virus going around. Can't say the name because I'll get demonetized on YouTube. But overall, Warren Buffett bought a ton of shares of Delta Airlines just because it fell down a little bit. The markets recover, guys. Don't be so scared. The market recovers, and the virus going around is something to take serious. So you guys just got to stay out of public places and do stuff like that. But overall, that is the episode. I hope you guys enjoyed it. So welcome to the bear market of 2020. I hope you guys enjoyed the episode. And if you could, drop subscribe down below. We'll see you tomorrow in another episode. Where's my bang? Take care, everyone. Have a good one.